think all of us really were astounded, right, when we saw that Bitcoin rose to close to 90K just a couple of days back. I think as of now, it's like 88K. It's a little crazy, isn't it? Like, I don't really know what factors could have actually brought it all the way up so quickly.
That's true. I mean, I am pretty inexperienced in the trading world, but I do remember there was a time when Bitcoin was this big future of trading and cryptocurrency, and there was a really huge spike. And then around COVID, it kind of just plummeted, and it hadn't really been able to get back on its feet for a very long time as it did in its heyday. So this kind of came really out of left field.
Yeah, I think that's maybe one of the most charming elements of crypto. Like, you never know where it will sort of lead you, right? Like, yeah, we've seen like many other crypto examples where, the changes happen so quickly that there are a lot of opportunities out there. For those that are new to us, welcome back to the Traders Brew Podcast. It's where we serve up the freshest insights to fuel your trading journey. I'm your host, David.
And I'm your co-host, Cass. And today we have a very special episode lined up for you.
So on the heels of the Trump election win and the Fed's second straight rate cut last week, we're going to dive deep into the state of the markets and unpack some key trading strategies to navigate the current environment. The expert that we have today is Ross Maxwell, VT Markets Global Strategy Operations Lead. Maybe you can tell us a bit more about Ross, Cass.
Ross is the perfect guy to lead us through this volatile landscape. I mean, he's got over 20 years of experience navigating these complex financial hubs around the world, like Hong Kong, London, and he's just built this rock-solid foundation in both investment and trading. And he's also a really passionate educator. So Ross is here to share his high-level insights, which I think you will find blend technical and fundamental analyses that empower traders really and deepen your market understanding. Hi, Ross. Welcome to the show. It's a pleasure to have you here with us. How's everything going?
Yeah, hi, Cass. Hi, Davin. Lovely to be here. Thank you very much. It's nice to be part of the VT Markets family and be part of this growth and the exciting journey that you guys are on.
Great. Now, I do have some questions about the new administration coming into the U.S. What do you think about this new administration's policies and about the Fed's monetary stance? How will that affect traders through the end of the year and into next year?
I think, Trump's policies are generally sort of going to be seen as a threat to inflation. In his last administration, he was very much looking at sort of tax cuts, deregulation, which is going to be good for American businesses. It's going to be seen as potentially strong for the US dollar, but it can also lead to like that further inflation that I mentioned. So, that further inflation can then put pressure on the Fed's decisions in terms of its rates cuts, or its future rates cuts. I mean, it was just as you mentioned in the introduction, they cut the base rate to 4.5 to 4.75 percentage points. The last meeting predicted to go to like 3.5% by the end of 2025 and 3% by the end of 2026. But I think they also touched on their minutes to sit there and say, like, they're aware of potential impacts that could affect the employment rate or inflation, and they'll remain sort of dynamic towards that. So you've got this sort of thing whereby if the Trump policies do start impacting inflation and we see that sort of like inflationary pressure again, then the Fed are maybe going to have to look at not reducing the interest rates as quickly as maybe they had hoped, which again is going to be good for the US dollar, right, in terms of the strength of the US dollar. So I think if Trump's policies do start to increase inflation, then the Fed are going to have to make that decision on whether or not they're going to sort of like continue with the rate cuts, or whether they're going to actually probably have to keep them a little bit higher for a little bit longer just to control that inflation. Because, even though inflation has come down, they're still slightly above where they want to be. I think it was like 2.4% at the last one. We've got the CPI news out this week. So, be interesting to keep an eye on that sort of thing as well, and just see where inflation is, how it's going to move once Trump's policies actually start implementing and coming into effect into the market.
Perfect. So I do have a question to ask. So you obviously have something in mind, like when you say that the Trump's policies are going to start increasing inflation, it's possible that it will start increase. Do you have any like certain policies that traders should look out for, like, that you think might, contribute towards this rising inflation?
Yeah, I think the main one, I mean, obviously he's going to deregulate the markets and stuff. He's going to be promoting business. He's going to be promoting manufacturing, that sort of thing. I think the main one that could drive inflation, and this is not just from an American standpoint and from the Fed, but this is sort of like potentially a global issue, is the tariffs. Like, the trade wars that he implemented in the last administration. I don't expect anything to really change. I think he's been quite open that that's going to have to be another policy of his new administration. which in turn is going to drive up, costs of imports and stuff, which then feeds through to the bottom line, right? So I think the extent of the trade wars will probably play a big part on that inflation and the inflationary issues, not just, as I say, from a Fed standpoint, but globally. And that sort of like could lead to central banks around the world also having to monitor their rate policy, basically, their monetary policy.
Yeah, I mean, I'm quite aware from one of the previous podcasts that, when the Fed changes its rates, the rest of the world has to follow suit in some sense, right? It's always affecting the rest of the world.
I would love to hear more about your opinions about which sectors would benefit or suffer the most with this current political and economic environment.
We mentioned before that the Trump administration is very sort of pro-American business. Like, he's going to have those sort of tax cuts, that deregulation. And we've already spoken about the tariffs as well, especially on China. And I think China, in turn, last time, and again, I would expect it this time to have those sort of counter tariffs and stuff as well. So I don't think this administration is going to be much different in those sorts of aspects as the last one. So the financial sector performed very well in the last administration. And again, I think he uses it as quite a bit of a barometer and sort of like he uses it as an example of how well the economy is doing. So I think that will be another focus of his, like other sectors such as defense, construction, manufacturing. He sort of like has quite a big focus on sort of fossil fuel energies and stuff. So those sorts of markets will benefit from his policies. It's going to be very much like looking for pushing those sorts of sectors. That said, obviously, with his focus on fossil fuels, sectors like renewable energies may suffer, but I'm hearing a lot about this being quite bad for renewable energies and stuff. And certainly it could potentially be in the short term, but I think it's also important to recognize that Trump's administration is 4 years. So there will be administrations that come after this, and maybe their policies will not be as strict on renewable energies and things like that. So the renewable energy sector, the energy sector around fossil fuels and stuff, they will still be planning for future regulation and maybe like this move towards renewable energies, because that's the global strategy, right? So although America has very big influence and a very big part to play in this, future administrations are probably going to bring America back more in line with that move to renewable energy. So it's probably just more of a short-term move. And as I say, I don't see either sector really pushing to this sort of like sole reliance on fossil fuels. They're going to still be planning for potential moves in the future, sort of thing. So I think the tariffs as well that we mentioned, those sorts of things can impact things like the automotive industry, retail, and potentially sort of manufacturing, because as we mentioned previously, those tariffs drive up the cost of imports and really vital components that they need to keep the sector going, which is going to drive up prices and really maybe affect demand and stuff. And again, depending on those inflationary issues. So those are the sorts of sectors that could potentially struggle, or certainly in the short term have some issues that they're going to face. And likewise, the tech sector, a lot of the components of the tech sector come from China and Asia. And again, if there's tariffs imposed on those, again, that's going to affect the tech sector, along with sort of immigration policies. Again, it's no secret that Trump is going to have much tighter policy on immigration, much sort of stricter movement of people. And the tech sector really relies on sort of the cross-border movement of skilled labor, right? So again, just keeping skilled labor in that sector or getting them to come into America to be involved in that sector could prove a little bit more difficult with a lot more red tape and stuff like that. So those are the sorts of sectors that may struggle. I'm sure, as we all do when we face challenges, they will adapt. But those sort of sectors could face some sort of like short-term turbulence, I guess. As you're right, all sort of asset classes and stuff and sectors are sort of relatively linked, but then they will have different characteristics in terms of how maybe they impact it. So if we look at like individual asset classes, although there's going to be impacts from Trump's policies and stuff on commodity sector, especially in terms of sort of like oil and gold, especially if we sort of start seeing those inflationary issues that we've been speaking about previously. But we do have other factors that are playing out across the globe here, which are going to continue to impact these sectors. So you've got the ongoing wars in Ukraine, the Middle East, and Trump is saying that he's going to end these wars. But it's very easy to say that, but it's another thing to actually be able to exercise that and do that. And, especially when you're talking about really complex issues and fundamental issues between the opposing sides, like it's not easy just to go like click your fingers and that's going to be the end of the war. So we've still got these geopolitical issues that are playing out, which are going to keep those sorts of markets volatile and are going to have a big impact on it. It's not just going to be the Trump administration's policies that are going to be impacting those sorts of markets. When it comes to the Forex markets, we've already spoken earlier in the podcast about, the effect that Trump's policies can potentially have on the Fed and how they're going to approach future interest rate cuts and things like that. But, again, as we spoke about earlier on, the tariffs, potential trade wars can impact global inflation, and therefore global central banks are going to have to affect their decisions on rate cuts and stuff. Bank of Japan are very active in terms of their influence, and Bank of England are sort of readjusting maybe a little bit as well after the autumn budget in the UK. So these can have bigger impacts. Not just we could see some US dollar strength, but this is going to impact other currencies as well. So, we could see quite a bit of volatility in the Forex markets over the sort of coming administration as well. In terms of the equity markets and the indices, we've seen a really positive reaction from the indices. The US equities especially are making new all-time highs. And I think, again, it goes back to that Trump's policies are seen to be very pro-American business. So the stock market last time did extremely well under the previous Trump administration. And even when you throw COVID into the equation, the stock markets actually over his presidency performed extremely well. And he really focused on that as sort of like validation and proof that he was good for the economy. And, when you looked at the exit polls and stuff in America as they came out this year, that one of the overriding, I think it was like 51% or something, like a really large portion of the electorate said that the economy was their biggest factor in deciding who they were voting for. So Trump is going to use this, I think, again, as like an exercise to validate and prove that his policies are really good for the American economy. So I think there'll be a big focus on keeping the stock market going in that sort of direction. So I think, again, having traded through the Trump presidency before, I know that it can be quite volatile. He can be quite impulsive in terms of the impacts that he has. So I'm not sitting there saying this is just going to go up in one straight line. There's going to be some bumps along the way, but I think generally speaking, he will make sure that his policies impact the equity market positively. So, and then we've got obviously the sort of like the manufacturing, finance, defense, so forth. It's really trying to look for value in these sectors, these ones that are going to perform well under the Trump's administration. Look for value in those and look for the companies and those sorts of sectors that are really going to benefit from those sorts of policies.
Perfect. That's a really great breakdown. Me and Cass, we were talking to other analysts prior to this call, right? And they shared with us that they were positive that Bitcoin will rise if Trump is elected. So they did some sort of prediction. I'm not sure what the basis of that was, but it did happen according to the predictions.
Bitcoin just recently made an all-time new high, which is I think about close to 90,000 as of the day of us recording this. Like, what are the strategies do you think that traders should look at to be able to take advantage of the volatility of cryptocurrency right now? Because I know that Bitcoin has had a pretty volatile history so far.
I think it goes back to, I've mentioned it quite a few times already, that deregulation, right? Okay, so crypto especially, it's not a very heavily regulated market. It's moving more that way, but, and there's a lot of regulation that could happen. But I think, Trump's policies, especially you look at the influence that Elon Musk is having within that presidency, right, or within the campaign, and it sounds like he's going to have some form of role to play, or certainly some sort of influence within this administration. He's very sort of like much about American innovation, and that those sorts of factors combined, I think, is why we've seen this sort of short-term boost to cryptocurrency. And I think there's sort of like an impression that that's going to continue with the approach that this administration will take. It will be a benefit to digital assets, especially again, he's been very critical of sort of like the Fed and sort of like the FBI, although that's not necessarily related to this, but his skepticism of the Fed, again, probably sort of like in decentralizing those sorts of things. And those sorts of things just lean on the impact and it being positive, seen as a positive outlook for sort of cryptocurrency. So I think in general, cryptocurrencies across the board, they're a very volatile asset. Like even when we're going through good runs on digital assets, and Bitcoin as well, like we can see large corrections in very, very short, like really short, sharp corrections. So I think when we're looking at strategies to get into crypto and to use on crypto, I think we always have to keep that in mind. And again, it's just about managing your risk and being aware of the risks involved, being aware that these really short, sharp corrections can happen, and positioning yourself to be able to withstand that, or certainly manage your risk around those sorts of things. So maybe taking a bit of a longer term view on it so that you can hold positions through deeper drawdowns and deeper corrections and that sort of thing. But certainly I think it's just about managing your risk and just being aware that even though you may have a long-term forecast that Bitcoin and other cryptocurrencies may be going up, you may see sort of 20-30% corrections in very short spaces of time, even though your bigger picture and your bigger bias is that it's going to go higher, sort of thing. So it's just adjusting your strategies and your risks to allow and accommodate for that volatility in cryptocurrency, as it's something that is a characteristic of that market and always has been. And in the short term, I don't really see that changing.
Interesting. Right. I seem to think, I'm looking at the charts right now, and it seems like there's almost an inverse relationship with gold and Bitcoin. We see that the gold prices have sharply declined after Trump's victory. So at its peak, I think it was about close to 2.8K, right? It was like 2,788 thereabouts. And now we're looking at it close to 2.6. So, what do you think is your outlook for gold in the coming months? And what strategies would you recommend for traders looking to profit from these movements?
Like we've seen, like gold has performed really, really well in 2024. It's made consistently new all-time highs. And I think that's because we've seen inflationary pressures decrease a little bit, interest rate come down, and we've sort of seen this move to sort of like more safe haven assets and stuff. But I think with the new administration, the reason we've seen this sort of like little dip in gold at the moment is going back to those potential higher inflation and stuff like that. But we've got, under the last Trump administration, we saw this sort of like more move back towards risk on sentiment. And I think, again, the market is positioning itself a little bit back towards that side of things. So it takes it away from sort of safe haven assets like gold and maybe dollar Swissy or something like that, and into sort of like more risk on assets or riskier assets, where people try and take advantage of this sort of like the potential rewards that are out there on the riskier assets and stuff. So I think that's probably why we've sort of seen that little dip in the short term. Again, gold, it can sort of recover. I'm not saying it's still, the charts are still very bullish, but I just think just those sorts of perceptions of the Trump administration are just sort of playing out at the moment in the gold price.
Great. Thank you, Ross, for that. That was really insightful. Well, obviously, before we close off, I do have a key question, most important I think anyone would really want to ask about the Trump administration. And we've seen this happen before. This isn't the first time that Trump's been in the presidency. And I think people kind of have an idea of what to expect, or maybe markets and companies of businesses would have an idea. But what would be a key piece of advice that you would offer to traders and investors as they plan their strategies with these election results? And how are they preparing for this new administration?
Ultimately, again, the theme through the whole discussion has been like, he's going to be very pro-business. And I think we can expect more of the same. I think in terms of what happened in the last presidency and his last administration, I think we're going to see a continuation of those policies. There's a couple of differences just to be aware of and make traders aware of, especially when sort of like managing risk and stuff like that. So obviously, there's a very big difference in terms of how the market reacted to the fact that he became the president-elect. And when he became president-elect and it was clear that he won the election in 2016, the markets actually crashed like 5% overnight on that thing. And I know they recovered very quickly. And I think even by the end of the next trading day, they were actually back to where they had been and maybe slightly positive. Whereas this time, the markets just rallied straight away. And I think it's mainly because the last time there was this uncertainty. He clearly was much more aggressive, much more vocal, much more volatile in terms of like the policies that he was trying to implement, or he was saying he was going to implement. It was like this uncertainty and unknown a little bit. And the markets, as we all know, they don't like uncertainty. So they will react quite negatively to the uncertain times. However, this time we've seen it play out before. And so there's now this sort of like more recognized, it's more known the impact it's going to have, which is why I think we've seen this initial benefit. So I think the policies are already starting to get priced into the market. And I think, again, having traded through a Trump presidency before, we can see these really, as I said, he's quite impulsive, especially sort of like the trade wars and things like that potentially are going to come in. They will have short-term negative impacts on the markets as well and stuff. So even though we may have this view, and I think I don't see any reason why the stock markets, especially and things like that, won't be positive in the coming years as he will really push that through his policies. That doesn't mean that they won't be susceptible to short-term corrections and swings, and as I say, they can happen very quickly, very sharply, just for the way that the policies will be implemented and the way that Trump communicates and stuff like that. So whilst we may have this view, it's very important not to get married into that view, especially if you're a shorter-term trader, not to get married into that view and manage your risk accordingly and almost expect the unexpected and manage your risk accordingly, so that if you do get caught on the wrong side of one of these market moves, then your risk is still managed. And I think that's probably the strategy that I would sort of like try and impress on people is like, you know, no matter what the individual strategy it is you're using, you need to make sure that you're having a good understanding of your risk exposure to the market and really stick solidly to the risk management principles that you have to be able to protect yourself even when those counter moves happen and take place in the market.
Awesome. Yeah, risk management is really important, I think, especially during this volatile period, right? Thank you so much, Ross. I think, that's all the questions we have for you today. You've given us a lot to think about. And, since me and Kaz are fairly new to the whole industry, right? These insights will definitely help us understand the markets better. I hope, this for our listeners, we have shed some new insights into this very volatile period. And, it will help you make sense of the markets as the market is digesting these election results. As always, trade safe, and we will see you in the next episode of Traders Brew. Thank you. Say bye-bye, Cass.
It's been lovely to have you, Ross, and thank you so much for your time and these lovely insights that you've had for us. It has been invaluable, and I really hope that we'll be able to have you again soon to talk about all the ways that the market will gain. Well, thank you, everybody, and have a good day.
Thank you very much, guys. Always a pleasure.
Join us for the next episode of the VT Markets Traders Brew podcast, where we'll continue to explore the fascinating world of the financial markets. Whether you're a seasoned trader or just starting out, there's always something new to learn. Our podcast is available on Spotify, Apple Podcasts, Amazon Music, and iHeart. Be sure to subscribe to us on those platforms for new episodes of our Traders Brew podcast. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. Trading leveraged products such as Forex and CFDs carries a high level of risk and may not be suitable for all investors. There is a possibility of losing all your initial capital. Before trading, you should fully understand the true extent of your exposure to the risk of loss and your level of experience. Please note that past performance does not constitute a reliable indicator of future results. Future forecasts do not constitute a reliable indicator of future performance. If you do not fully understand the risks involved before deciding to trade, you should fully consider your investment objectives, level of experience, and risk tolerance. You should become aware of all the related risks and seek independent advice from a suitably licensed financial advisor.